Filling a gap in their offerings, NVIDIA hopes to gain money and market share with Arm's extensive reach by contributor. InfoWorld thinks stock NVIDIA is sitting pretty in AI, artificial intelligence, right now. For the next few years, most AI systems will continue to be trained on NVIDIA GPUs and specialized hardware and cloud services that incorporate these processors. However, NVIDIA has been frustrated in its attempts to become a dominant provider of AI chips for deployment into smartphones, embedded systems, and other edge devices. To address that strategic gap, NVIDIA this past week announced that it is acquiring processor architecture firm Arm Holdings from SoftBank Group and the SoftBank Vision Fund. Once the acquisition closes in the expected 18 months, NVIDIA will retain Arm's name, brand identity, management team, and base of operations in Cambridge, United Kingdom. It will also expand Arm's Cambridge-based research and development facility, while establishing an NVIDIA research facility, developer training facilities, and startup incubator at the site. Arm will operate as an NVIDIA division. This is truly a landmark deal. NVIDIA will almost certainly integrate its GPU technology into the core smartphone, IoT, and embedded chip architectures designed by Arm, thereby driving its AI technologies ubiquitously to edge devices everywhere. What follows are the principal respects in which NVIDIA will benefit from acquiring Arm. Bolstering NVIDIA's bottom line. NVIDIA is picking up Arm for a $40 billion consideration of cash and shares, which makes it far larger than the $7 billion acquisition of Mellanox that closed in April. Arm comes into NVIDIA as a significant cash cow from which its new parent will almost certainly fund ambitious new projects and fill in acquisitions going forward. NVIDIA's acquisition of Arm is expected to be accretive to the acquirer's bottom line. Once the deal closes, Arm will start contributing its considerable profits to its new parent's own net income immediately. NVIDIA's income statement will gain millions of dollars in Arm's annual licensing fees and billions of dollars in royalty fees. The transaction, which is subject to the usual closing conditions and regulatory approvals, represents a middling return on SoftBank's $32 billion outlay when it took Arm private in 2016. NVIDIA's bargain on the deal stems largely from the fact that SoftBank had run into a cash crunch after losing billions of dollars due to the pandemic and bad bets on Uber and WeWork. SoftBank will acquire an ownership stake in NVIDIA of no more than 10%, effectively making it one of NVIDIA's largest shareholders. Giving NVIDIA a new competitive lever. NVIDIA's Arm acquisition comes at a time when Intel's next generation of chips has encountered major delays. NVIDIA will be able to leverage the Arm acquisition to contend with Intel across a wide range of mobile, edge, embedded, gaming, and IoT endpoints.